Today we're diving into something massively exciting, ANZ's brand new Low Risk LMI Waiver. No, this has nothing to do with the government guarantee scheme. You don't need to be a professional, a doctor, or a lawyer. Absolutely not. It could save you literally hundreds of thousands of dollars on your home purchase. So you're going to want to stick around. ANZ's Low Risk LMI Waiver allows eligible borrowers to borrow up to 95% of a property's value without paying $1 of LMI. This policy is crazy. It can be used for purchases, refinances, for a home to live in, for an investment property, with both principal and interest-only repayment options. Here's the thing though, it is targeting some higher income segments, which we're going to break down, and it's restricted to some of Australia's more lucrative suburbs. Right now, it's not available online and only available for a limited amount of brokers, which we can help with. But hold on, before I get too far, what exactly is Lender's Mortgage Insurance? Lender's Mortgage Insurance is an insurance policy that's there to protect the bank in case you're unable to pay your loan back. It's there completely to protect the bank's interest. It doesn't help you as the individual consumer.
Why won't you help me?
But it's generally applicable in Australia if you're borrowing more than 80% of the property value. And the Lender's Mortgage Insurance can be tens of thousands of dollars. So you might be wondering, just get to the point, Jayden, am I eligible? Well, let's break down the requirements of ANZ's Low Risk LMI Waiver. Well, firstly, the property has to be a standard residential property. It can't be commercial, it can't be self-managed super, any specific assets, it needs to be a plain old home. The second criteria around this, it needs to be in one of 145 eligible suburbs. Now, these are all high value suburbs. Places like Rose Bay in Sydney, Toorak in Melbourne, and City Beach in Perth. There are also specific borrower criteria. Now, it's always subject to credit approval, but at a high level, they want you to have a very strong credit history with no missed repayments or black marks on your file. They need to see a high level of uncommitted monthly income. In other words, you need to be earning more than enough money to cover your home loan and expenses to comfortably afford these repayments. And it's also subject to meeting ANZ serviceability and credit criteria. The big issue with this new waiver is there are some pretty lofty minimum loan amounts. The minimum loan amount eligible for this waiver is $2 million, with the maximum amount depending on the postcode ranging from $4.75 million to $7.6 million. And this is really the key concern with this new program. It's the minimum loan amount.
I'm sorry, I can't afford that.
A loan amount of $2 million translates to a household income of about $450,000 or more. This excludes a pretty big proportion of first home buyers, particularly those in the lower to middle income brackets. All right, so we've established that this product isn't going to be great for everyone out there, but it will suit a section of people. So let's go through some of the benefits. The first one's obviously cost saving. Saving on Lender's Mortgage Insurance can mean putting tens of thousands of dollars in your pocket. It also means you've got to increase borrowing capacity. You need to put less deposit down. You might need to put down 5% deposit, reducing how much you need to save and potentially how much you might need to sell if you own shares and other options. Let's look through a real life example. Imagine you're buying a $2 million home. Normally you'd need a 20% deposit or $400,000 to avoid the Lender's Mortgage Insurance. But with the Low Risk LMI premium, you'd only need 5% deposit or $100,000. Plus you'd avoid those Lender's Mortgage Insurance costs. For a $4 million home, you'd normally need $800,000 as a 20%, but with the waiver, you'll only need $200,000. You'd also avoid $136,000 in Lender's Mortgage Insurance costs. Now, these all sound like pretty crazy numbers, but the reality is in places like Sydney and Melbourne, getting into the market can cost that much. And the difficult thing in the current market is that movement in prices. Say you're aiming to get in the market in the next 4 years, you might save $65,000 per year over that time frame if you're in a higher income bracket. In 4 years' time, based on the current property price growth, if you're aiming to get into a $1.5 million property today, it could be up to $2 million in 4 years and you could miss the boat. The market could well have outgrown your expectations. And that's where this policy can be a good help. Your income and savings might not grow by that $500,000 over 4 years, and this policy could help you get to the market a little bit sooner. Some other general examples of where this could be helpful are if you're looking at potentially refinancing, or where you might have bought a home a couple of years ago, you might want to refinance and access previously debt equity that wasn't available to reinvest and build wealth faster. I've seen it fairly commonly in the tech space where you might not want to liquidate shares and don't want to use that deposit now. This scheme could be a great way of getting in the market without having to sell down your shares, paying capital gains, and getting the upside today. I've seen it with families wanting to upsize where bridging loans might not be available, and it means you can get into the market before you have to sell your current family home to move straight from one home to the other. It can be particularly good for cash-backed individuals wanting to have a bit of a safety net of savings. You might want to just put the rest of your cash in the offset account and have it available. This can be a great product for that. Or if you're self-employed and you want to leave cash in your company instead of doing Division 7-8 loans and different things, obviously speak to your accountant around this, but it can be good because it means you don't have to pull out your larger deposit. You still have the cash there, but you can get into the market without paying hundreds of thousands of dollars in Lender's Mortgage Insurance. Now, obviously that's all the good, but there is some bad with this stuff. There are a number of drawbacks. To meet the minimum loan amount at 95%, the purchase price needs to be over $2.1 million to get to the loan of $2 million plus. So in Sydney, for a lot of home buyers, you might be looking at $1.5 to $1.8 million mark. This policy isn't going to be any help to you. The second issue with this is the policy's high credit standards. You might have strong income, you could be on $450,000, $500,000 a year, but if your credit score isn't high enough, you're not going to be eligible for this policy. Credit scores are data-driven assessments by credit bureaus that predict the likelihood of someone defaulting on their loan or not repaying.
You will lose everything you have gained.
A longer credit history with consistent, responsible credit use typically leads to a higher score. So if you're a young person who's only just been in the market, you might have only had one credit card, you may not have had your credit file for long enough to have built up a high enough score to be eligible for the scheme. We can definitely check that out if you are interested and wanting to find out more info on this scheme. And so what happens if you aren't eligible, if you aren't one of the lucky people on $450,000, $500,000 a year looking to buy a $2 million home in Sydney and Melbourne? What is possible? Well, as I mentioned right at the top of the video, there are professional lenders mortgage insurance waivers that don't need these huge income gut targets. If you're a doctor, an accountant, a lawyer, a nurse in some cases, you are eligible to have the lender's mortgage insurance waived if you've got a 10% deposit, sometimes less if you're a doctor or a specialist. Another way of getting in the market with a low or no deposit is a guarantor loan. If you have a family member, you could use their property as additional security to help get in the market through the use of a guarantor loan. And there are other government schemes as I mentioned, so hit us up if you want to know more info for that for a free assessment. And if you are ready to apply it, what is the process? Well, the best thing is working with a mortgage broker like Hunter Galloway. We can help do the pre-work and make sure you're eligible for this specific product before you apply. We can see if there are any other products in the market and things you're going to be eligible for that you might not be otherwise aware of. ANZ's Low Risk LMI Waiver is a complete game changer for eligible home buyers. And as I mentioned, if you're not eligible, there could be other strategies that could help you avoid lender's mortgage insurance altogether. If you're ready to explore these opportunities, contact us at huntergalloway.com.au. We're here to help you every step of the home buying journey. We're mortgage brokers. We're based in Brisbane. We help people all around Australia. So if you want help or a free review, hit us up at huntergalloway.com.au. We'd love to help you out. If you want to see more videos like this, make sure you give us a thumbs up or subscribe. And until next time, we'll see you guys.